Brandon, how are you? Let's get this ball started. How are you? Not doing that. Not doing that great. But we're moving right along. Amy, Mark, Mary, Brafo. Brafo? Interesting name. Petite Chef Station. Nice name. Mike. Dealey Clay. Okay. Interesting. Raxon, how are you doing? Dean, Nathan, how are you all doing tonight? It is getting ready to get started. My name is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. I'm going to apologize right up front. I'm not going to last the whole 2.5 hours. Last night I had to cut out early because the throat was getting a little too bad, and tried to make the whole day with nothing to do but just sit, chill, watch movies. I tried not talking at all today, but it's still getting a little sore, so I can't stay on all night. So let's see if we can answer some questions before we have to call it a night. So I can feel it starting to hurt already. That ought to be fun. So let's get started. Where do we leave off? CVS. CVS. First thing I always want to see, always, I want to see where the high, the low, where it was a year ago, where it is now, and give me some kind of idea which direction it's going. It looks like she's going sideways. Okay, we're at 57.75. Tomorrow is a new day. I believe it is week number 11. Week number 11 for the third quarter. RSV. Never heard of them. $57.75. We're going to look at the 58s. The 58s go for way over 1%, and that's what I'm looking for. I'm looking for a safe, predictable, and consistent 1% per week using nothing but pre-qualified dividend stocks. Alrighty, telemedicine. That's funny. That would be kind of neat. But anyway, let's take a look. A year ago, CVS is sitting around 66. She made a top at the beginning of the year at 83, and the bottom was back in June at 52.96. Look at the last 30 days. Last 30 days, we're going to pick up on the 9th. Where is the 9th? Here we go, the 9th. 30 days ago, here we are at 57. She drops all the way down to 55.50. 30-day high was on Wednesday, almost at 60 bucks. You're starting to pull back now. So it looks as if CVS is not going to be a good choice for this week, but most likely for next week. So I'm going to write it down for next week. And we add it to the list, CVS. All right, let's continue. VOD, UGI. Do I do weddings? That's an interesting one. Speak on overall structure, uptrends and downtrends. Clemo St. Louis, looking at the wrong things. Sorry. So we want to look at UGI. What the heck is UGI? UGI. That's going to be a no. Big fat no. I don't do monthly options because monthly options just don't pay the same. Now, if you're new here, I look for a safe, predictable, consistent 1% per week. I cannot get that with a monthly optionable stock. They have to be weekly options. Okay? Sinbad, Vodafone, VOD. That's going to be a no. The reason why it's going to be no, Sinbad, check out where it is right now. Thursday was the high of the year, which means this thing's going to be in a downturn for the next couple of weeks. So do I like that? No, not at all. I try to stay away from that at all. Austin, how are you doing today? Let's keep on rolling. Mark, how are you doing? Joseph, hi. And Justin. Gukar 1. Tom. Jabs, no, whatever that one is. Gerson, how are you doing? Let's see how the throat holds up for today. Hey, Tingalawa. Interesting name. Okay. All right. Let's keep on moving. Vodafone is going to be a no. Sorry about that. Next on my list would be LUV, which is Southwest Airlines. Mr. Banky. Mr. Banky. Lovely name. What am I looking at? LUV, which is Southwest Airlines. Now, Southwest Airlines, I always want to look for is the high, the low. Where was it? Where is it? What direction is it going? How can we make money off of it this week? And it looks as if we take a look at the last 30 days. Look at that. Southwest Airlines, excuse the pun, but it looks like it's taken off to the upside. 30 days ago, around 24. Now we're at 30 and a half. And Friday was the first day of the pullback. Okay, what happens usually at the first day of a pullback? Well, we can't really tell because you had one here around the 12th. You had one on around the 18th, the 19th. You had another one over here on the 31st. And now we have our fourth one. 1, 2, 3, and 4. Is it going to continue going up or is it going to pull back? Lucky Larry, how you doing today? So I really can't tell with LUV, but what I'm going to do is I'm going to put it down for 3 weeks from today, or not this week, not next week, but the week after, just to see how that is moving. Because if you take a good look at it, stocks go up and then they go down. When they get to a simple high, it usually pulls back. Doc, hey, high, and simply high. Well, alrighty then. Let's keep the ball rolling. So LUV is going to be a no. Look what we have next. Walgreens. I'm doing pretty good. Hope you're doing better. I'm doing much better than I was last night. My throat was sore as hell. Julie Ford. Now, if some of you have lost your voice before, you will know the symptoms. You get that little pain in your throat right there, and it just gets worse and worse and worse. Yep, last night. Then all day today, I think I must have said at least 20 words all day. And I was like, you know what, I'm going to hang out. I'm only going to do an hour tonight, only because tomorrow morning I got to make sure I'm in line for the morning trading group, because those are paying customers and you guys are learning. You haven't gotten there yet. Good evening, Darbenley. How are you doing? Jerry Beard. I'm worried because Kramer said to sell Walgreens. Well, I'm not quite sure, but I've seen SOXL, CSP, really? SOXL. And what was that other one? CSP? CSP. I don't take anything that Kramer says to heart, only because he takes money from other people to give his opinion. Yeah, I don't do that. I look at the numbers. I look at the factual numbers. What does it cost to join the morning crew? It's $100 a month. Okay, what you get for $100 a month, you get to actually watch all the trades that I do, and then you can ask me direct questions, and it's all live, and it's interactive. So that's one of the nice things about it. Also, you get a list of all the stocks that I am personally looking at. If you look at my track record from the year, I think I went one loss in one account, 2 losses in another, and 3 losses in another. 1, 2, 3. Hey, here's what it is. All right, let's continue. All right, so that's LUV. It's going to be a no. Walgreens is next. WBA. Now, as much as I say I like NJBIT, do you give a discount to poor struggling teachers? I wish I could. Okay? But Jerry, you know what? Drop me a number. I will give you a buzz. Now, I have a couple people that sent their numbers yesterday, and I didn't get back to them today. I was saving my voice, and I'm trying not to overdo it. Do you use teeth? I have no idea what you're talking about. I have my own teeth. But thank you. I have no idea where that question was going. It is what it is. All right, let's take a look at Walgreens. Okay, here's our high back in December. Our bottom is clearly Thursday. Okay, a year ago we're at 22. Now we're at 877. It could hypothetically be the bottom of the year. We don't really know. A year ago we were at 21.95. Now we're currently at a bottom of 846. Now, Thursday was the bottom. Friday was one day the upside. I love 2 days the upside before I jump in on anything. Now, I already have some Walgreens. That's not an issue. But I'm always looking to dollar cost average on the downside. You're going to make most of your money. What are we talking about? We're talking about investing in dividend stocks. Now, you're going to make most of your money buying low and selling high. Now, you can't get any low. I've been saying this for a long time. You can't get any lower than the low of the year, and that's where we're at. However, this thing keeps going lower and lower. Eventually, it is going to get to a bottom and just keep on going up. Yeah, Jerry, I'm all with you too. But I am looking to dollar cost average down. I always do, because look at the numbers we're getting. 878. The 9 is going for 15 cents a share, which is over 1.5%. I like 1.5% on a week. So let's keep on looking. What does Walgreens usually do with this? Now, I don't see what the point is of taking a look at what Walgreens usually does this time of year, because Walgreens is currently doing something it's never done before. Sinking and continuing to sink until it finds a final bottom. But look what she normally does. She normally goes down from the second week of January all the way down to the second week of October. So right now, we're in September. We should go a little bit down before we get to the second week of October. Then from October to the end of the year, she goes to the upcycle. Okay, could it happen? Yeah, it could. James, sipping pineapple juice really helps sore throats. It only lasts a few minutes, though. Yeah, well, I'm sipping on honey and honey and water, which only lasts a few seconds. That's why I take a tiny sip at a time. It soothes the throat for a little bit, but I'm only going to put in an hour tonight because hopefully all the extra rest is going to be helpful. Honey and water is best. Yep, I'm going to try what I can. Why the cart is different on Walgreens? Why the cart? Oh, you mean the chart? Well, because Walgreens is in a downturn. Just going down, down, down. Simone, how are you today? Nice to see you again. All right, so I like Walgreens. Don't get me wrong. We had, hold that thought. We had Andrea do a deep, in-depth report on everything that Walgreens owns and their projected outlook for the next 3 to 5 years. I think it was very compelling. I mean, they got 8,700 stores and they own a whole bunch of stuff other than Walgreens themselves. They did buy out quite a bit of the Rite Aid stores. Ohio guy, I was at Walgreens the other day and they were lined up with Rite Aid people bullshit. Well, alrighty then. I don't know because different Walgreens are different. You know, the Walgreens around here looks the exact same as it did 2, 3, 4 years ago. Nothing's changed around here. But then again, different parts of the country have different issues. To fill prescriptions, oh wow. Yeah, you got the aging. You got a large mass of people all getting old at the same time. And we have 3 opportunities to get our drugs. Walmart, Walgreens, or CVS. All 3 in every major city in the United States. That's what people are looking for. Ease, simplicity, and a place to get their drugs legally. There you go. Walmart, Walgreens, or CVS. Now I'm sure Walmart and CVS would like to see Walgreens go out of business because then they get more business. It's just weird. Your thoughts on DG? A Bodie, DG, huh? Dollar General. Dollar General. Interesting. Did we go with Dollar General the other day? Take a look. There's the high of the year. There's the low of the year. Where we were and where we are. Okay. So currently is going for 82.80. So we're looking at the 83s, and the 83s are going for $1.50 a share. That's way over 1.5%. I love you at 1.5% per week. But let's take a look. Last 30 days. Here we go. 30 days ago, we were at 117.88. Okay, she shot up a little bit. Here's our high right there at 127. Then we had a big drop from 125 all the way down to, was that 84? And then our 30-day bottom was on Thursday. So Friday's one up day. Now, what does Dollar General usually do this time of year? Okay. Well, it looks as if Dollar General is going to go down just a tiny bit this time of year. Well, that's not guaranteed. That's his historical performance. Historical performance is looking at 10 charts from January 1st to December 31st for 10 consecutive year. That's 2014, 2015, 2016, 2017, so on and so forth. Gray Matter 24. Interesting name. I'm sure there's a story behind it. Love to hear it someday. That's just seasonality, but it's not guaranteed. Okay, I like looking at the charts because the charts gives me an idea what my fellow investors, that's me and you, we buy, we sell on a consistent basis. So what is it looking like? Well, a couple of weeks ago, we were already here. Then we got whatever news that created this. I'm pretty sure it's probably earnings, made a drop. Now she's going sideways, found its bottom on Thursday. Now, hypothetically speaking, she should be going back up. Now, you're always going to make your money in the stock market buying low and selling high. Thursday was the bottom of the 30-day period. I like 2 days to the upside. So I'm waiting for Monday. If she opens up higher on Monday, that's a perfect opportunity to jump in my humble opinion. Circle Dollar General. That one looks good for tomorrow. All right, next on the list. CVX. Wait a minute. Kohl's. Wait a minute, wait, where are we? SMH. What the heck is SMH? SMH. SMJ is Smuckers. Well, SMH. What is SMH? SMH. Vanik Semiconductor. Really? Never heard of them. So, when I see something I've never heard of, SMH. First thing I want to do is run on over to Yahoo Finance to find out exactly what their dividend structure is. How consistent are they with their increases? Alright, this is going to be a big fat no. Look at this. 2012, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. This is just once a year. They pay their dividend once a year. Okay, and it's usually in December. 35, 33, 32. That's going backwards. 57, 29, backwards again. 70, 82, 106, 75, 79. Yeah, I'm going to say no to these guys once a year, and it's not even 10 years. No, 12 years. So 12 years of dividends, but they pay once a year. All right. All over the place. CMG, Chipotle, they have no dividends whatsoever. That's going to be a no. Sorry about that. So let's keep on keeping on. All right, so next on the list will be Kohl's, KSS. And we see what's happening to Kohl's. Here's our high. What is that, 29.50? Here's our bottom at 17.50. A year ago we're at 24, and currently we're at almost 20, 19.90. All right, let's take a look at the last 30 days. Here we go, last 30 days. Pretty easy to read. Okay, 30 days ago we're here at 20.40. We drop down, back up, drop down, back up, drop down, back up, drop down. We're heading to the down cycle. We should go down a couple more days before we go back up again. So Kohl's is going to be for next week. KSS. Okay. Chevron CVX. Texas Roadhouse. DFS Discover. Huh. I sent you a DM and never got a call. Yeah, Sandman, you did send me a DM with your phone number. I am going to give you a call. Don't worry about it. I just didn't call. I didn't talk to anyone today. I think I may have uttered 24 words today. That was it. Okay, so I still have your number saved. I have 3 people's numbers. They actually sent me their numbers. I do plan on calling them tomorrow, depending if this is feeling better. Okay, so right now it's feeling kind of good. So let's see how far we can go before we have to cut out. How's the throat? It's feeling a little crappy. Kohl's goes EX for 50 cents on Wednesday. Well, let's take a look at... Nope, we haven't done Macy's yet, but we're taking a look at Kohl's right now, so sit tight. Let's take a look at the numbers for Kohl's. So Kohl's at this moment is in a little bit of a downturn. See, the 30-day high was here at 21.20. Right now we're coming down from that high. We're at 1990. She's probably going to go down a little bit lower. But look at the numbers. At 1990, the 20 is the closest, and it's going for 34 cents. So at the current price right now, at 1991, the closest strike price is 20. And that's well over 1.5%. 1.5% would make me a freaking happy camper. All right. Next on the list, Chevron CVX. All right, Chevron, really quick. Our high way back here, 171. Our bottom is here, 137.50. Okay. A year ago at 167.50, we dropped down, almost hit a bottom here at 140, shoots back up, pulls back down. Here's where we are currently right now. CVX is at 138.55. The 139s are going for 153. Again, another good quality company, over 1%. So let's zoom on in, see what the last 30 days look like. Okay, here's the last 30 days. 30 days ago, we're at 145. Okay, our high is at 150. Our bottom was Friday at 137.70, somewhere in that area. But here's the thing. Our high was 2 weeks ago. She's dropping, 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 dropping. She should find a bottom any time this week. And when she does, I like Chevron. Look at the numbers it's giving you, over 1%. So I'm going to write CVX for the list. Next on the list, we already did Kohl's. Macy's. Here we go. Here's our high. Here's our low. Here's where we were a year ago. Here's where we are now. A year ago, we were at 12. We dropped all the way down to 10.50, something like that. Topped out right about 22, and now we're at 14.61. I like Macy's. It's one of my favorite stocks for the year. It has been the most profitable stock I've ever had. Okay, but look where we are. Again, now I do have some Macy's currently. A month ago, we're at 15.60. We went to a high at 18. Now we had a gap down, which we should look forward to this thing filling, because it's going to fill eventually. Macy's walked away from the negotiating table 4 times this year. They had 4 offers for buyouts. Well, we're currently at 14.61, and the 14.69 will give us right around 14.50, which I don't have the numbers for. The 15s, those numbers aren't accurate. The numbers on Macy's are not accurate at all, so we're going to have to wait until tomorrow morning when the market opens up. Appliance check. We're going to do the Qs, huh? Well, let's do the Qs real quick, because it doesn't take long for me to say no to the Qs. Main reason is it's out of my price range. I like staying under $250, but you know what's worse about the Qs, appliance check? Check this out. Let's go on over to Yahoo Finance. Throw the Qs in there. Q. First thing you're going to see when you look at all the dividends, okay? 2013, okay, right here, 2013. 16 cents. 22, 24, 27, 37. Nice. Consistently going up. 21. Well, that's going backwards. 25, 24, backwards again. 39, 25, backwards again. 26, 34, 32, backwards again. 29, backwards again. 29, 36, 27, backwards again. 33, 28, backwards again. Up, down, up, down, up, down. But it gets worse. Hold on 1 second. This is specifically for appliance check. You think dividends going up and down, no consistency, no predictability, you think that's a good thing? Wait a second, I'm going to show you this. And this, if you have, you know what, I'm going to say, if you have half a brain, you'll take a look at this and say, oh, hell no. 0.61, that is the yield. The yield is basically when you put your money into something, the rate of return. Yeah, they're giving you a dividend. Okay, great, wonderful. But that dividend comes out to 0.61% return. That is worse than CDs nowadays. You can put your money into a government bond to get 5%. This thing's giving you a little bit over 0.5% for the year. What the hell are you thinking putting your money into something like that? That is for somebody who has no clue and no responsibility. You give your money to the Qs, they give you less than they give you a little bit more than 0.5%. Wonderful. Now we did the numbers, and let's do it. What is it? The LAR 72. 72 divided by 0.61. Okay, so hypothetically speaking, appliance check. You put your money into the Qs, it's going to take you right around 118 years to double your money. Okay? Now, the rule of 72, how many years is it going to take you to double your money? 118 years with the Qs. You really, really, really want to put your money into that? Okay? User 87670125640013. What the hell were your parents thinking when they named you? Think about it. That's a crazy ass name. All right. Johnson & Johnson. Johnson & Johnson's usually a no because of the premiums usually aren't that great. Well, it's going to be a no just because of where it is. All right. Here's the high of the year 3 days ago. Well, this thing's going to come down, drop like a rock. But at 164, the 165s are going for $1.16, not even close to 1%. David, thank you. Thanks, Joe. You feel better. Okay, call me Joe. Most people call me James, but yeah, it is what it is. Robert, MRK. MRK. MRK 117. Interesting. Here's our high. Here's our low. Here's where we were. Here's where we are. Here's the direction we're going. It looks like it's going to be no based on this right here. The reason why I say based on that right there is because for the last 30 days she's been shooting up to get a little bit of profit taken here. Now she's going up still. It's a little too close to the high. It's actually at the high of the 30-day period, and that's usually a no for me. Ness, spiders, really? You're going to take the exact same thing as the Qs did. Number one, it's a no because it's too close to the high. Reason number two, for me particularly, it's $500. It's a little overpriced for me. Okay? But here's the thing. Let's take a look at the SPYs and see what spiders are offering. You take your money and you invest into spiders. What are they giving you? 1.1%. Now, that's a hell of a lot better than the Qs. Okay, appliance check, you're getting a little over 0.5%. This dude's getting twice as much as you, and he's doing the spiders rather than the Qs. I wouldn't do either. JEPQ, oh my good, Brent, you must be hanging out with these two dudes. Let's take a look at JEPQ. JEPQ. Alright, so JEPQ is a hell of a lot better than Spider or the Qs. JEPQ is giving 9.2% per year. 9.2, it's a hell of a lot better than the Qs and a hell of a lot better than the Spiders. But Johnson & Johnson, we already took a look at that one. It's going to be a no. What platform do I use? This is Thinkorswim. Yeah, my throat's feeling a little better, so it's getting a little bit of exercise. I'm having my water and honey and my sucrets to help numb the throat. Oh, I feel so much better. Nice. All right, we're going to do Johnson & Johnson. That's a no. JEPQ is a no. Spiders a no. Merck is a not today. Yo, what up, someone? What's happening to you? Can you do AT&T? Now, AT&T, we looked at it yesterday. Here we go. AT&T is going to be a big fat no. It is at the high of the year. Okay? It's at the high of the year. Now, I like to buy low and sell high, not buy high and wait for it to go higher. Now, don't get me wrong, AT&T is on the list, but it's going to be a no for this week. I'm actually going to put it down for 3 weeks from today. They're going to get plenty of space for this thing to fall back down. And it's already on my list for 3 weeks. Okay, FOBO. Are you financially free? Well, under the current circumstances, I am. But if I lose something in my health and I have to pay for a bunch of shit, then probably not. Okay, so If I stay healthy for the rest of my life, yeah, I'm perfectly wonderful. But yeah, if I gotta go to the doctors anytime soon, that's gonna hurt. Hey, 86, yeah, I'm feeling a little bit better. Do I own any international stocks? No, I do not. NES, F-U-B-O. What is F-U-B-O? Fubo TV. What the heck is Fubo TV? Now, when I tell people, right, F-U-B-O, when I tell people I like stocks that are consistently increasing their dividends and have been in business for over 20 years, most people have a tendency to ignore that and give me something that's basically worthless. Now, FUBO has no dividends whatsoever, so that's going to be a no. What are the criteria you look for on Friday when you decide what to do with your position? Messmaker, how are you today? What am I looking for? Well, here's the thing. If I'm going to buy a stock, number one, I want to buy it when it's in the right position. All right. Now, stocks go up and they come down. That's all they do. Look here. Okay, it came down, went up. Came down, went up. Came down, went up. Came down, went up. That's all they do. They go up, they go down. Now, there's certain stocks I like to keep my eyes on a consistent basis. Why? Well, because they consistently give me over 1% per week. Now, 1% per week is well over 50% per year, and that's what I'm looking for. A safe, predictable, consistent 1% per week. Now, there's only about 300 companies that I actually like. Those are ones that have consistently increased their dividends for more than 20 consecutive years. Two, they have weekly options. Why are those important to me? Well, number one, a company that consistently increases their dividends, well, they got to be profitable to continually hand out profits to the shareholders, because that's what a dividend is. A dividend is a profit that the company gives back to the investors. And if that increases every single year, well, there's something there that's called logic, reason, and common sense. Okay, so if a company is consistently profitable every single year, well, that's where I want to invest my money. And there's only about 300 of them that are consistently profitable, consistently increase the profits that they hand out back to the investors, and that's you and me. That's you and me. We are the investors. As soon as we buy and sell stocks, we become investors, we become shareholders. Now, what are you doing? I am looking for a safe, predictable, consistent 1% per week. Now, I don't care if the stock goes up. I do care if it goes down or goes sideways. I want to know. I want to get intimate with the shares. Okay, I'm not meaning, take them out on a date or anything weird like that. I want to know what they are consistently. So I look at them in the morning, along with my trading group, because we have a small trading group. We meet every Monday. Every day to go over what we're looking at. And then I'm here with you guys at night to see what's happened during the day and what we can project out for tomorrow. Now, tomorrow's Monday. It's the beginning of week number 9. Wait a second. Let me just double check. Wait a second. It's right here in front of me. Okay, here we are in September. We are in the 3rd week of September. So this is week number 11, 12, and 13. Because there's only 13 weeks in a quarter, right? So if this is week 10, this is 11, this is 12, this is 13. So on the 30th, we are going to week number 1 of the 4th quarter. So that's only 3 weeks away. So here's where we are currently. Look what's coming up. You have MPW, Occidental Petroleum, VFC, Albemarle, Devon Energy, Coca-Cola, Macy's, T. Rowe Price, and Waste Management. They're all paying their dividends this week. How is CWA strike affecting AT&T? Well, let's go back and take a look at AT&T and see what we think. Alrighty, what are the criteria? Okay, so for Friday, my main criteria is, this is my main criteria. What stocks are paying the dividend this week? Okay, now to make it onto my list, okay, now you guys are going to have to do the same thing. You create a list. List 9,600 different stocks to choose from. So how do you choose? For me, it took me years to figure out, and this is what I came up with after, plenty of years. So I look at consistent increases in their dividend payments. Well, that's a shortcut way of trying to figure out how profitable they are, and how consistently profitable they are. That's one. Number two is the weekly option. So that's it, just two criteria. That is it. Consistent increase in their dividends and weekly options. Now, I like 20 years of increased dividends. You might ask, who are they? Well, that's the Dividend Kings. 50 years of increased dividends. Dividend Aristocrats and Dividend Champions, both over 25 years of increased dividends. And then you have the Dividend Contenders. That's 10 years to 24 years of increased dividends. And then I like to throw in Warren Buffett's list to make 5. So out of those 5 lists right there, that's about 300 companies to look at. Now I take those 300 companies and I throw them into the calendar. But I'm not quite done there yet, because there's other things I want to look at. Number one is being the book value. I want to make sure, absolute worst case scenario, I'm getting higher dividends, and if the thing goes belly up and they have to pay off all the investors, well, I want to make sure the book value is at least a reasonable amount. Point in case, NVIDIA a couple of weeks ago was around $1,200 a share. Hey, it was great for those who bought it, but what happens on the flip side? Well, the flip side, okay, NVIDIA has a 2-cent dividend. I think it was 2 cents. No, it was 2-cent dividend a couple of weeks ago when it was like $1,200 a share, and it was a 2-cent dividend. Well, now it's $120 a share, and it's a 1-cent dividend. So they cut the dividend in half after they did a 10-to-1 split. But it's worse than that, because NVIDIA's book value is only $2. So if you had bought it for $1,200, 3 or 4 weeks ago, it's still only worth $2 a share. Well, now you have a 10-to-1 split, so now you have 10 times as many shares, but still they're only worth $2 a share. Anyway, Sean, if stock goes down after you buy, how do you deal with that after selling the covered call? Well, Sean, I'm not 100% sure what you mean by that question, because rule number one is never buy something you do not want to own. Why would you buy it if you don't want to own it? You buy it, you hold on to it, and then you sell it when it becomes profitable for you. Okay, I always go into every trade knowing why I'm buying the stock. So if you're buying a stock and you don't know why you're buying it, other than, hey, I want to make some money, which is a lame reason if you ask me personally, you should never buy something unless you're okay with owning it and you understand it completely. So let me just go back, take one step back for a second, and let me tell you how it started. In 2008, my daughter was 9 years old. She said, Daddy, can you teach me how to do what you're doing? Okay, so now I have an interesting scenario. I have to figure out how to create a trading strategy for a 9-year-old that knows absolutely nothing about the stock market, and make sure it is simple, safe, predictable, consistent in the way that she can lose. Because we all know what happens when a 9-year-old starts losing money. Okay? Daddy, I lost my money. She's going to start crying. I'm going to feel like shit. Then what happens? Mama gets involved and the couch is not as comfortable as you think. Okay? You know where I'm going with that. Anybody been there? Simple, safe, predictable, consistent in the way she goes. Okay, fine, great. So I come up with 5 rules. And these rules are great rules because they haven't changed since I came up with them. Rule number 1, never buy something you do not understand. Well, that's kind of logic, isn't it? If you don't understand it, don't buy it. Just because someone on TV says to do something, well, you shouldn't do that. You should do your own research. Do your own due diligence. Does it make sense? That's a big question. Does it make sense? Okay, so you buy a stock. Never buy something you don't understand. Never sell at a loss. It kind of defeats the purpose. Rule number 3, make sure the company is consistently profitable. Me, personally, I like 20 years of increased dividends. You guys have to figure out what is good for you. If you like companies with 5 years of increased dividends, hey, more power to you. If you like companies with 10 years of increased dividends, fine, more power to you. If you like companies that have no dividends at all, but it looks like it might go up, hey, that's your decision. I'm just sharing my rules, my way of doing it. And if, hey, you agree with it, fine. If it doesn't make sense, don't do it. It's actually that simple. You agree? Great. You don't? Great. Really don't care. Because that's what it takes. Buy a good quality company, know why you're buying it, never sell it at a loss, make sure it's consistently profitable, because after all, it is your money. Okay? For my money, I want it to be safe, and I want predictability and consistency with growth and profits. So the 1% a week, that's my goal. Brent, how are you doing? Blue Steel, how is CWA strike affecting AT&T? Well, let's take a look at the chart for AT&T, and that should give us some kind of indication if anything is affecting it whatsoever. Well, it doesn't look like it, does it? Okay, look. The past couple of weeks, it's going up, up, up. And Tuesday, she shot up higher. Wednesday, higher. Thursday, a little bit of a pullback, but still a little higher. Higher lows. And Friday, nice. I don't think, it doesn't look like it's affecting it at all. But, you know, I could be reading it wrong, but that's the way it looks to me. All right. Dum. All right. PayPal's going to be a no. They don't share dividends. How about Dell? Dina, how are you doing today? Dell. Well, Dell pulled a little back. All right. I don't know if I have any. Do I have any Dell? Hold that thought. No Dell there. No Dell there. No Dell there. Nope. I don't have any Dell. I had some. All right, so Dell, here we go. A year ago, was sitting somewhere in the $50 area. Okay, we bought them out around 50, what was it, 55, somewhere in that area. Okay, we shoot all the way up to 180, pulled back to 90, now we're back up to 120, and we settled at 102. Well, that's where we are at the moment. Let's take a look at the last 30 days for Dell. All right. Now that's plain to see. You really can't confuse this. 30 days ago, we're here at 89, shoots up to a high at 118. Now we're back to 102, which means she's coming back down, having profit taking. Now, when I say profit taking, if you're at 88 and you shoot up to 118, that's a $30 increase. A $30 increase on an $88 stock. Well, that's a big jump. So what happens? Well, you got profit taking. Now we have 1, 2, 3, 4 days of profit taking, and we're going to have more until she finds the bottom, turns around, goes back up again. So I'm going to put Dell down for 2 weeks. Don't look like she's going to turn around next week, but the week after more than likely, and it's already written down for next week. I had $2,000. What would you invest in? Sorry, super random question. Actually, no, because newbies like you, you're new, the first time I've ever seen you here, so you always ask questions like that. My suggestion would be invest in some education. Okay, learn what to look for, learn why you're looking for it, and come up with a good strategy to get you there quicker, safer, and easier. Fairly 2x. I'm going to start off with 1,500 and build from that. Should I save more or just follow your lead? Number one, you shouldn't follow a damn word I say. What the hell do I know? I have no education in this whatsoever. Hello, sir. Clock AKS. How you doing? I get no education in this whatsoever. I took a road less traveled. Okay, I got out of service, went into service. Wait a minute. I got out of school, went into the service. From there, I went into an apprenticeship. I learned some interesting stuff. Opened up my own manufacturing company. Ran that for a few years. Took 10 years off, did a lot of nothing. After that, I decided to go back to work. I had enough money saved up to retire last year, so I get a 1% per week off of my investment. Not a huge amount, but it's enough to satisfy my financial needs. Now, for what you want to do, yeah, it's going to be a long haul. I have no idea. I have no information on you whatsoever, so I have no idea what you want to do. But the same rules apply. Never buy something you don't understand. Come up with a trading strategy that makes sense to you. Here, we're doing covered calls on companies that are consistently profitable. Those are the only companies I look at. Because to me, it doesn't make any sense to jump in. Yeah, it may be a brand new company and it may shoot to the moon. Well, then again, it may not. I'm at that point in my life where I don't have the desire to take those chances. I could, but I'm not going to. You know, I'm perfectly okay. You get to a certain point okay, where you feel like giving back to the community. That's what I'm doing here, okay? Now, I don't give away everything. I do have a paid trading group that people pay me to actually watch how I trade and answer questions for them, okay? But starting out, find a strategy that works for you, something that makes sense. One thing you should never have to do is lose sleep over where your money is. So never buy something you're not okay with. If you like Dell, well then buy Dell, if it makes sense to you. Don't buy something you don't know, or doesn't make sense. I mean, you guys give me a lot of stuff. I'm thinking to myself, what the hell is this person thinking putting their money to? But I don't know who you are. Because I come from a time frame where things made sense. Okay? If it ain't broke, don't fix it. If it works, great, put more money towards it. But the new stuff may be fine, but it may not be. For every company that opened up in the 80s, like, what was it? Dell, Microsoft, Apple, company in Blockbuster. Remember Blockbuster? What about Netflix? Same thing. They started at nothing and then they went to something. But how many other companies were in that same position? And they're no longer around. Blockbuster's no longer around. It was doing freaking phenomenal. And then one day it didn't. So I like to stick with companies I know they're always going to be around. EURN. What the hell is that? EURN. Yeah, has no options. Yeah, no thank you. Ford. I like Ford. Let's take a gander at Ford. Okay, here's our high for Ford a couple of weeks ago. What was that, 14.85, something like that, almost 15. And she gaps down, finds the bottom right here at 9.65, something like that. Comes up, pulls back down. For the past 2 weeks, she's been slowly fading. Right now, she's at 10.58. Do you like Ford at 10.58? Clock AKS, how are you? So Ford at 10.58. Well, what does that look like? Well, if I'm going to buy it, I'm going to buy it at 10.56, which means the market maker's going down. So that's something you need to take into consideration. If the bid and the ask are lower than the last price, well, the market maker's pushing it to the downside. That's exactly what it looks right here. 4 days down so far, and the market maker's pushing it down again. But at 10.50, well, that's going for over 2% per share. But do you like Ford at 10.50? And what does Ford normally do? Ford goes up, it goes down, it goes up, it goes down, it goes up, it goes down. That's all it does. So is it good to jump into Ford now at 10.58, get 2% off of it, selling someone the 10.50s? Could be. I don't put Ford on my list for tomorrow only because it's inexpensive and I can get 2% out of it. I'm not worried about Ford going out of business. They've been in business for over 100 years. No, I wouldn't say Ford is the best dividend stock because Macy's has made me a shit ton more money than Ford did. Do you recommend Doge stocks? What the heck is a Doge stock? D-O-G-E. DKS. Dick's Sporting Goods? Are you kidding me? DKS. DKS. 208. DKS. Let's see how well Dickie has been paying out its dividends. Now, historical data, and I want to look at dividends only, and then from there I want to take a look at the maximum amount of dividends that old Dickie boy has been paying. Now Dickie's only been paying dividends from 2012, so 2012 to today is only 12 years of dividends. Okay, I'm trying to think why would I do. Edward, I came late. Can you give me a 5 companies with the best dividends? Edward, no, I can't. Only because, Edward, I have no idea what your definition of best dividend stocks. Because we have different interpretations of data. Okay, I have no idea what your interpretations are. So anyway, Dickies, let's take a look. Goes from 13 cents, which 2 years it didn't increase. 14, 15, 17, 23, 28, 31, 44, 49, 1. Well, she's increasing consistently, but it's only 12 years. So you need to ask yourself a question. Does Dick Sporting Goods, DKS, 12 years with increased dividends, is that going to be enough for you? Well, last year at 110, the bottom was 167. The top was a couple of weeks ago at 239. Well, from the top at 239, she had a little bit of a gap down. Now we're at 208. Well, we have all the way all the way to go down here to hit the bottom of 185. So Dick's, if you like it, could be a yes, could be a no. But at the 208 area, the 207.50 is going for 460. That's over 2%. Well, that's nice. Okay, somebody want to look at Kohl's? We already looked at Kohl's. Okay, Eli Lilly. Andrew, how are you this evening? Eli Lilly, huh? Well, Eli Lilly is way out of my price range. You know, here's the high, here's the low, here's where it was, here's where it is. Way out of my price range, $900, and $900 is going for $17 a share. Okay, that's over 1%. But do you like it? Well, look where it is. Okay, 30 days ago we were at 740, and then we got a double high at 960, 970. Well, now we're at 902. You just lost $70 a share. I don't like big dollar stocks because it's uncomfortable for me. Okay, what does Eli Lilly usually do this time of year? This time of year, Eli Lilly, look at that. Look at that. That looks almost as nice as Apple. January 1st to December 31st. If it wasn't so much damn money at $900 a share. All right. Let's go backwards a little bit. Apple. Dina, Apple, huh? AAPL. Now, Apple hasn't been on my list for a while because it's just too damn high. Not the dollar price. I'm just talking the position of the stock. Okay, here we go. Here's the high, 235. There's the bottom, 165. Last year it was at 180. Now it's at 220. Well, where is it going? Where does it look like it's going? Okay, last 30 days. Okay, can't really tell with this one. 30 days ago we're at 212. Shoot up to 232. That's a $20 increase, which is a 10% increase. She pulls back and then rebounds and comes back again. So it's up and down. Not quite. It should be keep coming down, but we'll keep our eye on it. Snow, hello, and how are you today? All right. So that's Apple. Now, what does Apple normally do this time of year? Well, we've seen that before. It's beautiful. It looks just like Eli Lilly. See that? January 1st, nice mover to December 31st. If you buy it in January, get rid of it in December, it looks like you're going to make money on it. That's what Apple looks like. Eli Lilly's the same way, if you're in that type of position. But let's take a look at what the numbers look like. Okay, so right now at 220, the 220s are going for 465. If you like Apple. Now, Apple doesn't have 20 years of increased dividends. What does Apple actually have? AAPL. Now, Apple's been paying dividends since 2012, which is 12 years. Do you stay away from dividends? High PSX? Yes, I do. I stay away from high dollar stocks. Only because high dollar stocks got a long way to fall. That's the reason why I don't like high dollar stocks. So Apple goes from 9 to 11, 12, 13, 14, 16, 18, 19, 21, 22, 23, 24, 25. So it's consistently going the upside, but it only has 12 years. So do you like Apple? It has 12 years of increased dividends. And at this moment in time, they're offering just a smidge under 2%. Because the 220 is going for 465. You take 15 cents off of this, then you're at $4.50. Yeah, you got $4.50. That's 2% if you like Apple. I'm gonna write Apple down there also. Apple at 2% for next week. Cool beans. All right, Kohl's, we already did Kohl's, came late. Edward Tesla, yeah. Kamala should be good on industrial war complex, so should we get ready for to invest in war? Let's see if you think she's going to win. I don't think she's going to win. I think she's going to steal it, like they did last time. Don't get me started on politics. I meant after you have written your contracts for the week, rolling forward, letting expire, etc. Well, we find that out on Friday afternoon. Because if I'm buying Apple tomorrow morning, right now, tomorrow morning, it's going to be $220.15. That's my purchase price. Once I step into the ring, once I buy that stock, I'll always know what my stock price was getting in. Okay? Getting out, well, that's going to be on Friday. Okay? I don't know what's going to happen on Friday. So we take a look on it Tuesday. We take a look Wednesday. We take a look Thursday. And Friday at 3 o'clock, we take a look and see what the week's events brought us up to on Friday afternoon. So I like Apple, and if I do buy Apple tomorrow morning at 2:20:15, well, on Friday afternoon, we'll discuss it then. Would you explain how to roll a contract forward? Well, Tucker, that's pretty easy. You ready? Let's take a look at Abelma right here. We're going to open that up. You click on your ticker symbol, left click. Oops, sorry, I meant right click. Right click on the position. Okay, drop down should open up. This create a rolling order. Okay, and all I do is just click on the rolling order. Well, what is that doing? Well, it's buying the current position and it's selling next week's position. And this one would actually give me a 42-cent credit. But a 42-cent credit on an $88 stock doesn't really thrill me. But it is what it is. And I plan on moving it that way. USA 123, I'm drinking water with honey in it. Take a little tiny sip at a time. It rolls down, it coats the throat, makes it feel better. All right. I missed some questions. I missed a lot of questions. Holy cow. You guys, I did tell you I'm only going to stay on for an hour tonight. Oil has oversold by Exxon. Okay. Everyone invests in shitty but meme coin Solana. Okay, whatever. XRP bad. Grandma Margaret. Yeah, I kind of. Oh, Grandma Margaret. That's a nice picture. But no, I don't do cryptocurrency. Sorry about that. Thoughts on FDN? Nope. IYW? Nope. OGIG? Nope. What the hell are you looking at? What about XRP? Okay, I already told you I don't do cryptocurrency. Sorry, Grandma. I want to be safe like you teach. Now, Fairly 2X, that's a great idea. However, you really got to take a look at your situation. Okay? How old are you? How much time, money, and effort do you plan on putting towards it? And what do you plan on getting realistically? And more importantly than that, what's your risk factor? If you have a lot of risk factors, well, you might want to go for riskier things. This here, the trading strategy I'm showing you, I call it dividend capturing 2.0, where we take dividend capturing and we couple it together with covered calls, taking the two together. So I take a look at a good quality company, waiting for it to pay its dividend, because when a stock gets ready to pay its dividend, that's what these green dots are right here. All those green dots, that's when the stock's going to pay its dividend. Stocks have a tendency to increase in value 2 weeks before the dividend date. Okay, that's these little dots. So if I like Comcast, who's paying a dividend on the 2nd of October, well, I'm going to want to get it 2 weeks before, which is the week of the 16th. And then I want to get it on a Monday. At the market price, at the market open, as long as the chart telling me it's the right time to do so. Okay? I don't want to buy it at the high, and I don't want to buy it at the bottom. I want to buy it. Let's zoom into this so I can show you basically where I want to buy it. Okay? Stocks do nothing but go up and go down. That's it. They don't come to your house and wash your dishes. They don't water your plants while you're not home. They don't make your bed. They don't do anything but go up and go down. So this one went up, came down, went up. Now it's coming back down again. Now, when it comes down, it makes a bottom, which basically is the same thing right here, the bottom. Now, we don't know if this is the bottom because that could have been the bottom. That could have been the bottom. I like 2 days to the upside. 1, 2. Well, that isolates this little area. So here, I'm waiting for 2 days to the upside before I decide whether or not that's a bottom. Okay? Now, this trading strategy was created for my 9-year-old. It's simple, it's safe, it's predictable, it's consistent. If you do it right, there's no way you can lose. Now, people get a little uncomfortable when I say there's no way you can lose. Well, because realistically, if you think about it, Coca-Cola's been in business for over 140 years. Could they go out of business? Yes, they could. Okay, the earth could open up and swallow every single Coke machine and everything that says Coca-Cola on it. If you believe the magic bullet theory, that bullshit where the bullet stops in midair and turns 90 degrees, waits a couple of seconds before proceeding, yeah, if you believe that bullshit, then you believe Coca-Cola could go out of business overnight. Ford, could it go out of business overnight? Well, it could. Is it going to? Probably not. Now, there are some companies like Enron. Now, Enron, if you remember Enron, there was only one. There wasn't an Enron in every supermarket all over the world. There wasn't an Enron in every corner of the globe. You can go to almost anywhere in the world and find a Coca-Cola bottle somewhere, or something that says Coke on it, somewhere. It ain't going anywhere. Okay? Some companies go out of business because their time is come and gone. But other companies, Ford, General Motors, Bank of America, Wells Fargo, AIG, Walgreens, Walmart, these companies are going to be around for a while. They're not hurting. Okay. Let's keep on continuing. I'm going to go for a little bit longer because I don't want to overexert my throat. Can you please explain how to do a rollover? Oh boy. I just explained this a couple seconds ago. Now, doing a rollover is really not that difficult, and you're making it a little bit more confusing than it needs to be. Okay, if you own a position and your position is going to the downside, or for whatever reason you want to roll it forward to the next week, basically with Thinkorswim, I don't know how you do it on other ones, but with Thinkorswim, okay, I right click on the stock that I'm talking about. Okay, I come to where it says create a rolling order. And when it creates the rolling order, I click on that, I take a look at it. And basically, what is a rolling order? A rolling order is where I'm buying this week's current position. Now, when you roll a position, we're talking about covered call positions with the options, because you're buying back one option and then you're selling out the next week's option. All right? So this one, I would be buying September 13 options, which is this coming Friday, and then I would turn around and I would sell next week's option, 20 September. See, 13 September, 20 September. I'm buying those and I'm selling those. I'm getting a credit of 11 cents. Now, other than that, it would look something similar to this. Okay. Create a closing order. I could buy back, okay, create a closing order. I would buy back the options that I sold, right, because you have to buy those back first, and then I would turn around and I would sell the exact same ones for the week after. All right, let me go through these questions. I want to call it a night. What about BMW? Do you subscribe to the Dividend Kings newsletter? Did you know they had one? Walmart, love Walmart. Costco, overpriced. OGE, never heard of it. Can you analyze Camden Property Trust? No. Q's, no. ExxonMobil, love it. Is this Forex? No, it's not. OGE, no. Take a look at 10. Okay. Price. Bama Redneck, how are you doing? Walmart is at the high of the year. Sorry, you just joined. Did you cover Tesla? I don't do Tesla. They don't have any dividends. TKS Energy 10. Okay. OGE, I got one to look at. SAR. Never heard of it. ATM setting up. I'm going to send it at 260. Your trusty neighbor. Never heard of you. Rob Tony. Sorry, just joined. Did you cover Tesla? You think there's a further downside? Oh, geez, monthly. Thanks, Redneck. JBL, please. How you find dividend history on Yahoo Finance? Adobe, Yahoo Finance. Once you come up to the lookout, right? The summary. Summary is the first thing you're going to come to on Yahoo Finance. Okay, this probably looks familiar to you. Okay, Apple with the price, how much it's going up or down, the chart. Below the chart is going to be your dividend and your yield. Look at that. Apple is giving a 0.45% yield. That's horrible. Good thing I don't buy Apple for the holding on for the long haul. Okay, so once you're at this section here, you want to go over to bottom left. Okay, bottom left where it says historical data. Click on historical data, and this is what you're going to find right here. This is what is called the data stream. Okay, the data stream. Okay, September 6th, the open, the high, the low, the close, the adjusted close, the volume. All the information you want on the stock by date. Every single date, or every single trading day will be on there. September 3rd, the open, the high, the low, the close, the adjusted, and the volume. Okay? Now, I said I was only going to put an hour in. It's been an hour, so I got to cut out. My throat's starting to get sore already, so I'm terribly sorry, guys. But I do have to be in shape for my morning trading group tomorrow morning. Hope you understand. Talking for 3 hours a night, and then talking a couple hours in the morning. It's kind of getting to my throat. I can't really take care of it. I have 1,000 used to. That's funny. JBL. So, let me answer up these questions. That'll be it. Sorry, I just joined you. You cover Tesla? No, I don't do Tesla. PLTR? No dividends. PFE? Preston, I love Pfizer. I do. Come back tomorrow. Ask the same question. Buy Appen Monday. You thank me later. Oh, I don't think I will. Mickey D's. Love it when the numbers are right. Bama Rednecks is great. Stock, no stock, not strategy. Okay. Thanks for the recap. You got it. Fairly 2x. I'm 35. You got a long way to go, dude. I don't plan to take out any money until it grows to a certain amount. I want wealth. Woohoo! Cool beans. Tell you what. DM me with your phone number tomorrow. If I'm feeling better, I'll give you a buzz. I got 4 people on my list. Got to call tomorrow about Walgreens and DG this week. Gotta love both of them. Average, how much can you make a week? Okay. PASAR, I don't even know what that is. Average, how much can you make? I average 1% per week. So hypothetically speaking, if you have a $50,000 account, 1% is $500. You have a $100,000 account, 1% is $1,000. If you have a $1 million account, 1% is $10,000. So on and so forth. How do you get a hold of me, Dougo? You just email me or text me or DM me right here, top left-hand corner where it says Dividend Stock Talk. My pretty little face up there in the corner. You just tap on that. DM me with your phone number. I'll give you a call tomorrow. SUNS, Cool Beans. Are you holding or selling Mag 7? Never even heard of them. T-Row. I like T-Row price. Apple's looking good this week. How can I invest? Betty, your first time here, Betty, I can see that. Also, same thing. You want to talk to me, be careful. There's over 27 other people pretending to be me. Okay, I'm the one that will actually personally call you. If you send me your phone number, I will call you. Now, I had a couple people send me their number yesterday and the day before. I haven't had a chance to call them. I've lost my throat. I've lost my voice a couple of times. This is the first time I lost my voice in, I have like 30 years or so. So I know the symptoms are, and it's coming again, and I don't want to push it. All right, Redneck, with the phone number, he will call you. He will not reply to your message. Yeah, something like that. Thank you. All right, so you guys, thanks for showing up tonight. I'm going to apologize because I do have that sore throat thing going. I'm sure if you've been here long enough, you hear me coughing, you hear me hacking, you see me doing the cough drops, and the constant drinks are supposed to make it feel better. Anyway, all that being said, this is James from Dividend Stock Talk. I'll catch you again. For those of you in the morning trading group, I will see you in the morning. Michael David Robertson, you can let me know where you're heading up next time, buddy. Poseidon's last molar. It's not me. I feel great. It's just, this throat thing is getting to me. I'm not used to talking so much. Now, talking and listening, that's a different story. Okay, that being said, you guys have a great night, and I'll see you guys in the trading group in the morning. Other than that, I'll see you guys tomorrow night. I'm going to cut it short to an hour a night until this gets better. Until then, you guys have a great night. Punta Cana. Oh, man, I love Punta Cana. I actually went there and installed an aquarium in one of the resorts over there. If you guys have a great night, and we'll speak to you again tomorrow.